All right. Good morning and welcome back to the educational session. It is 27th December, 9 a.m. Eastern now, and let's get started. Once again, a warm welcome to those who are joining in or tuning in for the first time, and also to those who are regular watching live or offline mode. Thank you again for your support and helping me spread the word for this channel. All right, let's take some space. Okay, if you were there with me in the last session a few minutes back, Euro USD, we were talking it could push slightly above the 1900 handle, and that is what it has done. Technically speaking, it is now it is okay to resume its downtrend. All right, so last two sessions we touched upon the language, and I hope that you have been practicing your chart signals, and mostly you must be knowing it all what we have discussed, but we need to start from the basics to I need to bring in a few pieces after four sessions together, so that we can create a certain set of rules to handle the trading game. Okay. Today's session, let's focus on the theory portion of understanding a few simple but very effective rules of the trading. To to put it in a very simple and understandable language, if you can think about what would you do if you would want to learn a game that you don't know to play right now, any game. Okay, just imagine what would be the first step that you take to learn a game which you want to be good at, and you know nothing about it right now. Mostly the answer would be to find out the rules for that particular game. You won't simply, we won't simply go out and try our hand at playing that game without knowing nothing about the rules. That would simply be a waste of effort and a waste of time, and we are not going towards any goal at all. But once we have understood what the rules of a particular game are, at least we have some tool in our armor to try and play the tricks involved in that particular game. Yes, I hope you all would agree to this. So as I said earlier, and we'll be talking about it again and again, trading is also a game, and as you would spend your time learning the rules to play any other game, uh, this one has also got simple rules that if we keep in our mind, it really helps. Very simple rules. I mean, you sometimes you would be laughing at it, smiling it even now when I write it down here. First rule: two players. Now, there's nothing like two players, but to understand and to make it simple to understand, let us categorize the teams here. Two players are there. Now, it doesn't require much to guess who they are. They are the Bulls and the Bears. All right. Now, if we talk about bulls, okay, I'm using the word programmed with a purpose. You don't need to convince or explain the bulls to take prices or push prices higher. They are programmed. They will they will invariably push prices of a particular underlying instruments higher. This, if you continue the second point, bears, they are programmed to push, to drag rather, prices lower. All right. Two rules, two players, bulls and bears. Bulls are programmed to push prices higher. Bears are programmed to drag prices lower. The third point is very interesting, and you would be very happy if you remember this rule for life, at least till the time you're trading or you want to become a trader. When a new high is formed, they take a break. And when a new low is formed, they take a break. Now, it doesn't need to be explained who takes break when. In the first part, when a new high is formed, bulls, they go for a break. Now to understand this as a simple crude example, whatever you're doing in your life as an activity or an occupation, whether you're a student or a business person or you're working somewhere, if you're a student, once your examinations are over, you tend to take a break, go for a holiday or go for a movie or booze out, and then come back again, isn't it? You're a businessman, you set your goals. When you surpass them, you take a break in a different way and go for a holiday or anything. You take a break and then come back again. Similarly, when bulls print a new high, they take a break for a while and then come back. And when bears form a new low, they take a break and then come back. All right. So, if I would show in a pictorial form, this is what it would look like. Any market would look like the wave structure that I'm drawing here. I'm trying to draw. All right. That's precisely point number 3 we discussed just a minute back. What it says here, who would be in control in this arrow? Bulls, they print a high and they take a break, and then another high and a break, another high and a break, another high and a break. So just remember, point break. Okay. All right. What happened here in this particular wave, what happened? It's just about watching the chart, watching this wave, that's all. Can you see that a particular low which was formed was broken here? So a new low is formed. Yes, sir. So who has formed? Bears have formed a low here. Okay. When bears have formed a low, they will take a break. They took a break. Again a new low, a break, a new low. What happened here? Almost broke the high, previous high. So a new high, not a higher high, but at least they broke the previous high. So bulls are registering themselves again that okay sir, we are back. And then they take a break, a new high, take a break, new high, break, new high, break, and the story goes on. I'm not saying this is the exact way the markets move, but this is more or less the way any market would move. It is they take they make a high and then take a break. Bulls and bears form a low and then they take a break. Just imagine yourself in a condition where you are. Now, what happens psychologically when a new high or a new low is scored? There is so much of talking in the market that you end up taking a trade there. Imagine you taking a trade here, and then there is a drop coming in. You get into the fear mode and you exit there, and then price is dragging higher. If you have been into trading field, I can more or less assure that you have been into this situation more often, right? When you buy, prices drop, and when you sell, prices high. One crude example we can take: we have sold gold from quite a lower level, and prices have taken quite a bit higher. That's a different story. It's a prolonged pullback or a retracement, but more or less fear sets in when the prices go against you and you don't know what's happening. Okay, if you're understanding the waves properly, then there's no question to fear. But if you don't, normally with the novice traders, when they don't know the waves story or the structure, they end up buying high and they end up selling low. Most of them. That's why uh, they say 95% of the novice traders or the traders in general, they lose, and 5% of them make a lot of money. It's a simple rule: 95%, whatever they lose, go into the pockets of the 5% that are making money. At least there's no guarantee that you're going to make money by knowing these rules. I mean, you're going to make mistakes, everybody makes mistakes, but even if you have done and you know that okay, an error has been committed, at least you won't get into that fear psychology, and you might be able to control situation. All right. So in general, who's in control in this wave? In general, this is a periodic high, another high over here. So all in all, there are two perspectives to watch this same chart that I've shown here. A short-term trader will play short games, the game of buying first and selling second over here. He might get into the sell mode over here, and then again he might get into the buy mode over here. That's a short-term game. But a swing trader would visualize the entire chart as one wave, like what I'm showing here. A new high, break, he enters, he or she, and then takes it over to the next high. Is that okay? So three simple rules, and Very simply put, when the bulls and bears are playing this game, 2 points are created and they are broken, and they are named as. I mean, there is no hype, there is no major technical jargons involved. 2 points are formed and they are broken, and they are support and resistance. Supports and resistances play a major role. Just to understand, if the market is rising, you need to know which is the first point where you can place your risk or your stop loss. If that point is gone, you got to stop buying and start thinking on the other side. It may happen, it may not happen. At least you'll have to stop buying. Same case the other way around. All right, so that is support and resistances. Let's discuss uh, each of them individually now. Let's take some more space. Here we are. One simple tip or concept that I would like to straight away mention here. When you see a rising market, there is a certain significance, right? I'll explain why and how. And when you see a dropping market, the significant is something else, the significant part. And we need to simplify the charts by understanding, simply by looking on the chart. If it is a rising market, then you are going to focus on one point, and if it's a dropping market, you are going to focus on the other point. All right, that those 2 points that we mentioned, support and resistance. This is a rising market. All of you would agree, and that is a dropping market. The practical understanding we'll take up tomorrow. Right now, let's understand the theory portion. Okay, what is a support now? Can you focus on these points here? Maybe we can start from here. Can you focus on these points, please? All, you know that these are lows, right? Okay. Now, these are definite lows, but these are also supports. How? Let's define. Two criteria need to be matched for a low to become a support. Or at least if you, at least one criteria, if you focus on that, it should be higher than the previous low. So if you talk about this point, that is higher than the previous low, yes it is. And then a new high should be in place. Like, say for example, this is point, the price is 10 over here. I mean, let me write it down. $30, 20 and 50. All right. So 20 is higher than 10, and 50 is also in existence. That is, prices have rallied above the price 30 and made a new high at 50. Then this point can be defined as a support. All right. So 2 points higher than the previous low, and a new high is in place. Then that becomes 20 becomes a support. Not when the market is on its way towards a new high. All right. How many supports can you identify on this charts, please? On the rising part. 1 I have defined, 20 as a support, 10 let's just define that as a support as well. That's the first point. So I'm going to write down S. We'll give the numbers later on. S. How many more supports do you see on this chart? Can you spend a few seconds, please? Only the two rules that we just discussed. If you just answered 4, then technically it is correct. Anything more or less than that, we need to understand. All of you would agree to the fact that this is a support because you have a price higher than 20 and above 50 there is a new high in place. All of you would agree to this as well as a support. Alright, most of them would disagree with this point being a support. This is a potential support. Simply put, prices have not yet traveled above the previous high, which is over here. Had I taken the arrow above the previous high, then this would have been a support. Right now it is a potential support. It could be a support or the prices can tank lower. Alright. Now if you want to label them, you will label them as what? S1, S2, S3 and S4. Alright. The first point, which is near to the current price market. Alright, I'm back again. I just had a small disconnection. I hope all of you are there. Okay, let's continue. When this is a good point to remember for life. Actually, it is going to simplify the way you look at a chart. Whenever you look at a rising market, like what I've shown here, always have your focus on these points: supports S1, S2, S3, S4. The significance in a rising market is of the supports, not of the resistances or of the temporary resistances. 30, 50, 70, 90, they are all temporary resistances. They are not permanent. Why? Because the market is rising. But if the support S1 breaks, then there's a problem. There could be a problem. Alright, that's why a significant part in a rising market is of support. Similarly, if we go on the right hand side, where do you think the resistances are there? Resistances are the points which are lower than the previous high. That is, if this was a high, that is a lower than the previous high, and a new low is in form, is in place. Alright, so this becomes resistance. Similarly, if you can find out how many resistances are there, that one is also a resistance. Another one, another one. And if you want to label them, it would be R1, R2. Let me see if I'm there with you. Yes. I don't know how it got disconnected. Normally it doesn't. R3 and R4. Alright. So in a rising market, the significance is of supports. Have your eyesight there. And in a dropping market, the significant part is of resistances. Have your eyes in there. Alright, let's go a step further. Just by understanding the game of support and resistances, you can know much actually. Let's say if I drop the price until this point. What can you interpret in general? We are not saying that it's going to happen 100%, but in general, who has scored here? Bears have made one low, yes. What could be the most likely movement after this? A pullback. And if the bears are going to drop lower, where would they go actually? Which point would they want to target? Ideally, it would be the next support. Please remember, bears are busy focusing on breaking the supports sequentially, and the bulls, let's say if I make a rally through this point, can you understand that the first resistance R1 has been broken? So the ball is in whose court now? Bears or bulls? I'm quite certain you said bulls, and that is correct. This is the first point where bulls are saying, okay, I think you've done your game, now we are coming back again, we are registering ourselves. What should happen after that? Most probably, should you go and buy here? I think you would say that, all right, wait for a pullback. So wait for a pullback. You must be having questions. How do we know the pullback is coming to an end? How do we decide that the pullback is over? Please have patience, brothers and sisters. We are going to discuss it in the next story. All right, so it's pulling back. After the pullback, what do you do normally? Buy. Where do you place your stop loss? Below that low protective stop. And without even knowing anything else, forget about Fibonacci, forget about trend lines, forget about trends, just by knowing supports and resistance, can you tell me a story that, all right, Hirsch, most probably the next target for the bulls would be that resistance R2. So you would want to target that, right? Is this making any sense or logic to you? If the answer is yes, you and me are on the right path. All right. As I said, have faith on me for just a few more hours, and I'm going to exactly put some points where it's going to be very clear, crystal clear as to what you should do on a rising market, on a falling market, or on a sideways market. At least for now, in this session, the last point that I would like to discuss is this. In a rising market, past resistance, that is 30 over here, has got potential to become future resistance or support. I repeat, past resistance in a rising market has got a potential to become a future support, while on a dropping market, past support has got tendency to become future resistance. Past support has got a tendency. This is not a 100% rule, but it's just a guideline. Keep your eyes very close when you are just around the past support becoming resistance in a falling market and past resistance becoming future support in a rising market. That doesn't mean, I've seen people doing a mistake here. They consider 30 as a support. No, you don't consider 30 as a support. The support is 20. But after going to 50, when the markets are retracing lower, they are taking a break, and when they are hovering around the price 30, you should be very watchful. And if it forms a tweezer bottom or an engulfing bullish or a morning star here, what should you do? Don't ask even yourself. Go and buy. Place your stop loss just around the 20 mark and target the next resistance, or we are going to have the Fibonacci ratios in our hand very soon. All right. So that brings us to the end of the discussion part of supports and resistance. So let's bring this session to a pause here, and we will continue the practical or the charting tomorrow at the same time, 9 AM Eastern Standard. All right. So once again, let's bring this session to a pause, and thank you for joining online or at the offline mode. And as a gentle reminder, if you're not subscribed, please do so. If if you like, press the like button, and don't forget to spread the word, brothers and sisters. That means a lot to me. Thank you, and God bless. Take care.